Hey everyone, welcome back to the channel. Today we are diving into one of the biggest names out there, Amazon. If you've ever wondered whether Amazon stock is worth your money in 2025, stick around because we are breaking it down into simple, no-nonsense way. This company started as an online bookstore back in 1994 and now it's a global giant based in Seattle. We're talking about the world's largest online retailer, a leader in cloud computing with Amazon Web Service, and a big player in streaming with Prime Video. Amazon's got its hand in everything: e-commerce, subscription like Amazon Prime, cloud services, smart devices like Echo and Alexa, even physical stores like Whole Foods. They make money from selling products, charging third-party sellers, subscription fees, ads, and cloud computing services. In 2025, Amazon is still a powerhouse, holding a top spot in both e-commerce and cloud computing, competing with big names like Microsoft, Apple, and Google. Their first quarter sales this year hit $155.7 billion, up 9% from last year. They have been busy too, buying MGM Studio to boost their sales from streaming game, investing in renewable energy, expanding their marketplace and Prime services globally. Let's break down the good and not so good. On the plus side, Amazon's leader in e-commerce and cloud computing with the multiple ways to make money. Analysts are super bullish, 49 of them are saying strong buy, predicting about 20% growth in the stock price over the next year. Their massive scale, cash flow, let them keep innovating, especially with AWS and their subscription services like Prime, which keeps growing. But it's not all smooth sailing. The stock's taken a hit recently, sitting below its 52-week high, which shows some volatility. Its high valuation means it could take bigger hits if the market turns sour. Plus, they're facing a tougher competition in retail, cloud services, which could squeeze their profit over time. Weighing these pros and cons is key before jumping in. Now let's talk about what experts are saying about the stock. Out of 67 analysts, 49 are giving Amazon a strong buy rating, with 14 saying buy, 3 saying hold. No one telling you to sell, which is a great sign. Their average price target is 226, with some as high as 306 and others as low as 230. That's a big jump from current 2022. They're also expecting earning per share around 6.70 for 2025. The industry vibe is just as positive with a strong buy. Volatility-wise, the stock rated as average, so expect some ups and downs, but nothing too wild. Amazon score well in key areas but lags in others. On valuation, they are 4 out of 6, solid. But their high price to earning ratio 39.7 compared to the industry 22.3 shows they are trading at premium. Earnings are strong 5 out of 6 thanks to steady profit. Growth, though, is only 3 out of 6 with their earning per share growth 9%, slightly below its peer at 10. The industry average is around 15%. Performance is 2 out of 6 with an annual growth at 11% compared to its peer, which are trading at 13%. Health is their weakest spot, scoring 1 out of 6. Their ability to cover short-term obligation is low, with their current ratio of 1.02 versus peers at 1.51. And their debt to equity matches with the peers at 0.22 but isn't a stellar. In diversified retail, Amazon's killing it gross margin of 48.85%, way above the industry's 32.77. Their operating margin at 10.75 also beat the industry's 10.67, and their net margin is 9.29, tops the industry's 5.68. But their return on equity 20.75 is slightly below the industry's 23.64. Their debt to equity ratio is much better than the industry's 65.03, showing they are managing debt well. However, their price to book ratio at 8.22 is higher than the industry 4.93, meaning you're paying more for their potential growth. Amazon's in league of its own e-commerce, with 36% market share in US alone. They're up against giants like Walmart, Alibaba, Target in retail, Microsoft Azure and Google Cloud in cloud computing. Their Prime membership with over 240 million members keeps customer hooked. Their $93.2 billion in cash gives them room to innovate, especially in AI, which is a big trend in both retail and cloud services. But industry is getting tougher. E-commerce competition is heating up. Regulatory scrutiny on big tech is a constant headache. Every investment has a risk, and Amazon's no exception. In the market, slower consumer spending, supply chain issues like tariff could hurt retail growth. In cloud computing, Microsoft Azure, Google Cloud are coming on strong. Amazon's specific risks include a potential slowdown in AWS growth, which could hit profits, and their retail margins are razor thin. Rising labor costs and talk of union might drive up expenses, and their bets on the AI could eat up the short-term profits. The industry is cutthroat with a constant pressure to innovate. Regulatory risk like antitrust investigation could shake something. Geopolitical issues like US tariff on China imports could also raise cost and mess up with their supply chain. Amazon's gross margin is 48.85 in 2024. It's been climbing steadily. Their operating margin and EBITDA margin are also up 10.75 and 9.03, showing they're running efficiently. But pre-tax and net profit margin are slipping slightly at 10.76 and 9.29. Return on equity is 20.75, but it's trending down as their return on asset 9.4 and return on investment 17.50. These declines suggest some challenges in squeezing more value from their assets and investment, but their margins are still strong compared to the industry. Amazon's strengths are massive. They lead in e-commerce and cloud computing with a huge product range and logistics network that's tough to beat. Their diverse income stream from AWS to Prime to ads make them financially solid, but weakness exists. Retail margins are low. Their R&D isn't as strong as some competitors. They don't have many physical stores, which could limit their growth in some market. Opportunities are huge, though online grocery and voice assistant like Alexa streaming services are growing fast, and Amazon's got the cash to jump on these trends. Threat includes fierce competition from retailers like Walmart, potential data breaches, and currency fluctuation hurting international profits. Regulatory pressures like antitrust probe could also cause trouble. So, should you invest in Amazon in 2025? It's a strong contender, with a leadership in e-commerce, cloud computing backed by a strong buy from the analysts predicting 20% growth. Their diverse business and innovation keeps them ahead, but risk like competition, thin retail margin, regulatory scrutiny are absolutely real. If you're looking for a growth and can handle some volatility, Amazon could be a solid pick, especially if you buy on dips. What do you think? Ready to add Amazons to your portfolio? Drop a comment below with your thoughts, and don't forget to like, subscribe for more stock breakdown. See you in the next video.